Every year, millions of American seniors file their taxes and unknowingly leave money on the table, not because they did anything wrong, but because they simply didn't know about the credits and deductions the IRS makes available specifically for people over 65. We're talking about real money, hundreds, sometimes thousands, of dollars that could stay in your pocket instead of going to Washington. Today, I'm going to walk you through the most overlooked tax breaks available to seniors in the United States. These are legal, IRS-approved, and most people have never heard of them. If you're 65 or older, or you have a parent or grandparent who is, stay with me. This could be the most valuable 10 minutes you spend this year. Here's the problem. The U.S. tax code is more than 70,000 pages long. Inside those pages are dozens of provisions specifically designed to benefit older Americans. But the IRS doesn't send you a reminder. Your tax software doesn't always prompt you. And unless your accountant specializes in senior tax planning, there's a good chance these deductions go unclaimed. So today, we're going to change that. I'm breaking down 5 of the most significant and most commonly missed tax benefits for Americans 65 and older. Number 1, the larger standard deduction for seniors. Most people know about the standard deduction. But what many don't realize is that once you turn 65, the IRS gives you an additional deduction on top of the regular amount. For the 2024 tax year, a single filer over 65 receives an extra $1,950 added to the standard deduction. For married couples, if both spouses are 65 or older, that's an extra $3,100 combined. This is automatic. You don't need to itemize or do anything special. You simply check a box on your tax return indicating your age. It sounds small, but for a retiree in the 22% tax bracket, that extra $1,950 deduction translates to roughly $430 in real tax savings. Every single year. Make sure your tax preparer or software is applying this. It's one of the easiest dollars you'll ever save. Number 2, the medical expense deduction, and this one can be enormous for seniors. If your total medical expenses exceed 7.5% of your adjusted gross income, you can deduct every dollar above that threshold. And for many retirees, who often have significant healthcare costs, that threshold is very reachable. What counts? More than you might think. Doctor visits, prescriptions, hospital bills, dental work, vision care, hearing aids, Medicare premiums, including Part B and Part D, long-term care insurance premiums, home modifications for medical necessity like grab bars or wheelchair ramps, and even certain transportation costs to receive medical care. Here's the key. You must itemize your deductions to claim this. That means your total itemized deductions need to exceed your standard deduction before it pays off. If you have a high expense year, a surgery, a hospital stay, new hearing aids, run the numbers both ways. You might be surprised how much itemizing saves you. Keep every receipt, track every expense. The IRS requires documentation, and it's worth the effort. Number 3, the credit for the elderly or disabled. And this is one of the most underused credits on the entire tax code. If you are 65 or older, or if you are retired on permanent disability, and your income falls below certain thresholds, you may qualify for this credit. The credit is worth up to $1,125 for a single filer and up to $1,688 for married couples filing jointly. The income limits are modest. This credit is designed for seniors on fixed incomes. A single person must have an adjusted gross income below $17,500 to qualify. If you think you might qualify, look up Schedule R on the IRS website or ask your tax preparer to run the numbers. Many seniors who qualify for this credit have simply never been told it exists. Number 4, property tax relief programs. And this one depends on where you live, but it could be significant. Nearly every state in the country offers some form of property tax exemption, reduction, or deferral program for senior homeowners. Some states freeze your assessment. These are state and local programs, not federal, which is why so many seniors don't know about them. You won't find them on your federal tax return. To find out what's available in your area, search your county assessor's website or contact your local tax office. Ask specifically about senior homestead exemptions. In some states, these programs save senior homeowners thousands of dollars a year in property taxes. That's money that stays in your home. Literally. Number 5. Free tax preparation services. The IRS runs a program called VITA, Volunteer Income Tax Assistance, and a companion program called Tax Counseling for the Elderly, or TCE. These provide free prep for seniors 60 and older. These volunteers are trained to identify every credit and deduction we discussed today, and more. They know senior tax law, and their service is 100% free. To find a location near you, visit irs.gov and search for VITA or TCE. You can also call 211 to be connected to a local site. Let's recap what we covered today. Number 1. Claim your larger standard deduction as a senior. Number 2. Track every medical expense. Number 3. Check for the credit for the elderly or disabled. Number 4. Apply for your state's Senior Property Tax Relief Program. And number 5. Use a free IRS-certified tax counselor who specializes in senior returns. If this video helped you, please hit the subscribe button. Drop a comment below. I want to know if you've used these before. Until next time, stay informed, stay strategic, and remember, every dollar you save on taxes is a dollar that belongs to you.